Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 15 of the Forex market review. And if you haven't guessed already, I'm coming through to you on a Tuesday instead of a Wednesday. Tomorrow I'm going to be very busy, so I thought I'll bring the video early and we can see what's happening with the markets and where we think they're going. Let's jump straight to the charts. The first pair I'd like to start with today is the USO USD. And we were talking about this last week, looking at a buying opportunity for driving it from down at this low DSR level all the way up to these levels up here. And as we can see, the market has had a bit of a pause around this DSR zone and then started to push back higher. And now I'm looking at cancelling the trade if you weren't in it already. So if we were to drop down to a 4-hour chart, we wanted to see a lower low in price, which we had here, and the higher AO clear divergence, which means it came back above the line before making its higher AO. That it did, then it started to run up, drop down to the 1-hour chart looking for an entry. We can see this large AO here coming back to the zero line. That's where we would grab our Fibonacci retracement tool, do from the start to the finish of wave 3 motion. And for my entry requirements, I like to see it come back to the 1-hour 200 EMA line, this pink magenta line, and also the 38.2 fib level. Now we've never came back there for me, but for some people who like to trade it around the 23.6, that definitely has come there. So if you're looking at a buying opportunity, you probably might have entered around here, put your stops somewhere down here around 150 pips, and it's definitely delivered almost up to your 300 pip 1 for 2. So depending on how tight your stop loss, whether or not you had a very tight stop losses, and some people like to put it just below the lows of maybe 75 to 100 pips, you would have made your 1 for 2 there. But for me now, it's done its wave 3, it's gone up for 4 and 5. So if I was going to look at this, I would be looking at the entire move lower. So they'd be dragging it from the start all the way up to the end. And then I would be looking at an opportunity on the 4-hour time frame. And there you would want the pullback to roughly 38.2, testing this time the 4-hour 200 EMA line. And you would want to see this 4-hour AO come back below zero before looking at a buying opportunity. However, where I would like to put my stop losses, the entry is likely to be pretty close to that area. So therefore, I'm cancelling the trade also because it's almost touched the area where I think it could go, and I don't believe I'll be able to make my risk to reward 1 for 2 before getting up to these levels. Now, oil has been traveling higher, mainly with all the geoeconomical issues going on. Trump firing off all those missiles at Syria, and now he's sending out his ships to North Korea around there. So I'm not quite sure what's happening there, but you're going to see the oil price is going to go higher because obviously everything needs oil to keep it moving. But there are other opportunities which we'll look at, and that will be the pound Canada. So we'll jump to the pound Canada. So as oil rises, the Canadian dollar strengthens. In this case, because the pound should weaken against the Canadian strength. So we can see that DSR zone, it's now starting to push back lower. For me, we never had our 4-hour AO divergence, so this would be a quick trade setup with a very tight stop loss. We have seen it pull down, push back up, and now pull down again. You can see this large AO forming on the 1-hour. So that would be classed as wave 3. We'd grab our Fibonacci retracement tool, and if we come roughly to the beginning, it's somewhere around here. That's whether it's come back to zero line. Look up. We can see 1, up for 2, down for 3. So we'll be looking for a pullback roughly to the 38.2 and the 1 hour 200 EMA line. If we looked at getting in there somewhere around there, we could look at probably, depending where it comes to, maybe risking 50 to 75 pips. Where do we think it's going to go? Well, using our Fibonacci expansion tool, if we were to predict it's going to come back to those levels, you do from the start of wave 3 to the end, pull the pullback of wave 4. So 4 was there. We would then zoom down and would be looking at that level there or this level down here. So it's very likely you definitely want to get out before this daily DSR zone, and you could be making your 1 for 2 at the first Fibonacci exit point, which is a good thing, or you could be going for a lot more, or maybe needing to go to the 100 Fibonacci expansion, but definitely getting out around there and before this next DSR zone. So that's looking for pound weakness and Canadian dollar strength based on oil movement. But first we need a pullback, so we need that pullback before we can get in again. Another trade we're looking at is the pound Aussie. Another pound trade, but this one is affected by the Aussie. So what we can see, it's pulling up into this daily DSR zone. So it's going to start to find some resistance. We can see the daily 200, the daily stochastic now being overbought. We drop down to the 4-hour chart. This one gives me my divergence that I want to see on the 4-hour time frame. So it's looking, coming up, we can see this higher high in price, and we can see this lower AO. So that's definitely something to be watching. But first we need to see it push back lower. So we probably want to see some momentum to the downside. We might see it step up for its wave 2. We might see it pull down for wave 3. That's what we'll be looking for, and then we'll be looking for the push back higher to the minimum 38.2, and hopefully this 1 hour 200 EMA line would start rolling over and catching up with it. Then we'll be looking for an exit point down at this DSR zone. So depending where the entry is, obviously we've got to wait for this wave 3 on the 1 hour to form, then for the pullback. But this is just some early heads up. This may not occur to sometime next week, but it's giving you an early heads up of what to be looking for. So be prepared for possible trade short on the pound Aussie. The other one I'm looking at is the USD yen. We're starting to see it form some bottom here on this daily DSR zone and this daily 200 EMA line. So what I would prefer to see, it actually break the lows. Now we have our higher AO, but it just didn't give us a lower low in price. So if it could maybe just poke its head down a little bit more, and it could do that with the US dollar weakening as the yen strengthens. So if we start to see some unsettling information out there in the news, and we're starting to see the stock markets plummet a little bit, we're going to see people jumping back to the safe haven, which is the yen. So we should see this push back lower, and then hopefully that gives us our lower low in price and our new AO, which would probably likely be a higher AO as well. Then we can look for that opportunity of going long. But before we do that, again, we would need to see it push back up for its wave 3 on the 1 hour chart. Then look for the pullback, and then looking for a buying opportunity and riding it up to this daily DSR zone. And if you can make your 1 for 2 up there and using your Fibonacci expansion tool, definitely getting out before the Fibonacci 100 expansion level, then that would be a great trade as well. The last one is the ASX. And I'm looking at this Australian Stock Exchange because it's got AO divergence on the daily time frame with a higher price and lower AO, and also on the 4-hour chart with the high in price and our lower AO. All clear because it's come back below the zero line before making its next hump. So hopefully this is just people pushing the market up, and some people may be getting stopped out, and then it's going to reverse again. So if we can see it push down, it's probably going to do like a wave 1 up for 2, retest this area, then come down, test the 200 EMA line on the 4-hour chart, and then look at pushing back higher. We'd need to jump down to the 1-hour chart, but what we're going to be looking for is that wave 3. So we need that large push back lower on the wave 3. So if we can see that move down, we see the large AO form to the downside, then we see that pullback. It matches up with the 1 hour, which will then roll over and come down and meet up with it. And if we can get our 1 for 2, looking at making, there's a 120 pips, something down to there. So you probably want a 60 pip stop loss, which you probably could do. I know these ones are early trades, but I just want to give you the heads up on the ASX 200, the USD yen, and the pound Aussie. I just want to give you all advice and what's coming up in the market. So keep an eye out. This is what you should be doing, and preparing for what could happen, and not just waiting to the last minute and jumping in the trade willy-nilly. Have this set up on your charts so you know what you're looking for when the time comes and it sets up and confirms. Thank you for that. That was week 15 of the Forex market review. So as I explained earlier, it's coming through to you on a Tuesday because I'm unavailable tomorrow, which is Wednesday in Australian Eastern States time. Now, moving forward, I have a long deserved break approaching for me. So this will be my last video for probably 5 to 6 weeks. So hopefully out there, you can just watch all the past videos, set up all your trades, look for that AO divergence because they give you the best probability, and then follow your own trading plan and execute when told to by your plan. Whether or not that's getting in or getting out, they are both important. So I'll say goodbye for now. Wish you all a happy Easter if you celebrate it. And I'll see you sometime in mid-May, about 5 to 6 weeks. We wish you all the best in your success. Take care. Bye-bye.